In this video, we will look at the Doji pattern. Okay, it is not an easy pattern. It looks very simple, but there are different types of Doji in the market. If you go to this link, I have a Japanese candlesticks trading mastery program there. I have created an entire course just on Doji. There are 12 to 15 different types of Doji candles. Basically, this is a Doji candle. It has the same opening and closing price. The shadows do not matter. The opening and the closing price needs to be the same. And there are multiple different types of doji. So for example, this is a doji, then this is a doji, this is also a doji, this is also a doji. Plus the position of the doji on the chart is very important. As you can see, this doji appears after a downtrend. This doji appears after a uptrend. So there are different names given to all of these doji candles. So that is why I have created an entire video course just to help you understand the doji. It's a very important pattern which you must learn because it gives you important clues about the market. So this is a daily time frame chart of Google, which is the Alphabet company. Now, in this case, if you look at the context of the market has been going up. You have a tall green candle and you have the doji candle. Now, even if you have no knowledge of Japanese candlesticks, okay, just by looking at these two candles, it tells you something about the market, right? In the Japanese candlesticks terminology, every candle is considered to be a battle. Every candle is considered to be a battle between the bulls and the bears. And at the close of each candle, you know who have won the battle on that particular day. So on this day, the bulls have won the battle, right? On this day, you don't know who has won the battle. Okay. So that's the power of Japanese candlesticks. Within just two candles, you can see that the market psychology has suddenly changed. Look at the vibrancy of the market on this candle and the vibrancy of the market on this candle. Here the market is completely confused. As I said, it's a reversal pattern. So since this is appearing, this doji candle is appearing after a uptrend, it doesn't mean that reversal doesn't mean that the price will go down from here. Reversal simply means that after this candle the price might go flat or it might go down. Either of these two conditions can take place. From here, the probability that the price will go up is very low. Moreover, there is another pattern which is called as the doji after a tall white candle. That itself is a pattern. Remember, the doji after a tall white candle, doji after a tall white candle becomes resistance. So remember this point. It's a very powerful candle pattern, but we will discuss that pattern in some other video. I think in one of my videos I have discussed this pattern, the doji after a tall white candle. If you go to the chart analysis playlist on my YouTube channel, you will find a video there titled the doji after a tall white candle. It's a very important candle formation on the chart. So anyways, this video is just about the doji pattern. Basically, it is a candle which has got the same opening and the closing price. So this is a daily time frame chart. So the entire day the market was uh, trading between this high and low range. However, the opening and the close is the same. So it's a very special candle. And look what happens here. Now in this case the market crashed from here, but the doji should tell you, it is giving you a very important market clue that the market psychology has suddenly shifted. So the bulls are losing their steam. Now, the doji is not a candle on which you initiate a trade, right? We discussed the bull harami pattern, right? You are not allowed to initiate a trade on certain patterns. You are allowed to initiate a trade on certain patterns. Okay. So you need to know which patterns are the ones where you can initiate a trade and which patterns are the one where you cannot initiate a trade. So a doji is a pattern where you cannot initiate a trade. So whenever you see a doji, either you fully exit your existing position or you take a partial exit or you move your stop loss. So in this case, if you are long somewhere here, if you bought somewhere here, when you see this candle, either you take a full exit or you partially exit, like you sell some of the shares, or you move your stop loss up. So if your stop loss is here, you might want to move your stop loss here or maybe here. Okay. And this single candle itself is a pattern, okay, which I will discuss in some other video. So whenever you see a tall green candle where the opening is near the low and the closing is near the high, then the midpoint becomes a potential support. Midpoint and the low becomes potential support. So anyways, that's the doji candle for you. Go to this link. I have uploaded the Japanese candlesticks trading mastery program there. I have more than 1000 chart examples in that program. Students from more than 170 countries are already enrolled in that program. As of now, it has more than 32,000 students. You can check my Udemy profile. It is available publicly. Okay. I have dedicated an entire course to the doji. I think if you go to level 14 or level 13, you will find an entire course where I'm only discussing doji. Okay. Apart from that, you will find the discussion on doji in level 2 of the Japanese candlesticks trading mastery program. As of now, there are 16 levels of training in that program. Each level is multiple hours. So there is tons of training material available there. Go to that link. It will help you read candlesticks charts the way I am reading here. Okay. As you can see, if you do not take exit on your long positions, then you see what happens.